$6.3 billion moved on-chain this week as Bitcoin whales orchestrated one of the most dramatic accumulation shifts we've seen in months. That $16.4 billion single transaction on Monday alone set the tone for what turned into a genuinely fascinating 7 days in the Bitcoin market. Bitcoin itself moved modestly, climbing from $63,845 to $65,032, a gain of just under 2%. But the real story wasn't the price. It was what the whales were doing underneath it. We're looking at extreme fear in the market, an average fear and greed index of 27.3 for the week, and whales responding by quietly accumulating. This is textbook contrarian behavior. When everyone else is panicking, the smart money moves in. Monday started with a bang. Nearly 28,800 Bitcoin moved between whale wallets in a single day, including that monster $16.4 billion move from one wallet to another. This immediately signaled a shift from distribution to accumulation. The price edged up 0.82% on Tuesday as the on-chain structure locked into early accumulation territory. Wednesday was calmer on volume, but the trend held. Whales moved another 12.7 thousand Bitcoin as Bitcoin held steady around $64,800. The accumulation sentiment deepened, which is Wall Street speak for smart money was confident. Thursday brought a small hiccup. Bitcoin dipped 0.6% and the fear index hit extreme territory. Panic was peaking, but here's the thing. Whales were still feeding into exchanges on Thursday, which actually suggests they were taking profit on smaller holdings or rebalancing, not capitulating. Friday and Saturday were the capstone. Whale outflows from exchanges actually quickened on Friday as Bitcoin held $64,925, which is the opposite signal from Thursday. Instead of feeding coins into exchanges to dump them, whales were pulling them out. That's accumulation language. By Saturday, Bitcoin had climbed to $65,032. Whales had shifted direction again, and the fear index eased back below 30. The patterns here are worth your attention. We saw 14,370 whale transactions this week, with 702 of them being mega moves, 1,000 Bitcoin or more. That's consistent volume at the highest level. But the net exchange flow went negative by 544 Bitcoin, meaning more coins left exchanges than entered. That's accumulation in the clearest sense. This doesn't happen in bear markets. This is institutional or ultra-wealthy individual behavior that historically precedes rallies. The anomaly compared to typical weeks, usually when fear hits extreme levels like we saw Thursday, whale behavior becomes scattered and defensive. Instead, we saw methodical, patient buying. One more thing to watch going into next week, we haven't seen capitulation volume yet. True bottoms usually come with panic selling that floods exchanges. We haven't hit that, which either means the bottom is still ahead or it already happened and we didn't notice because whales were too smart to all sell at once. Daily briefs go live every day at 9 p.m. UTC on SwissWhaleIntelligence.com. Subscribe and turn on notifications so you don't miss tomorrow's update.